Who's the Federal Reserve and why do we care what they're going to do with their interest rates? Hi, my name is Josh Thomas. I'm a mortgage loan officer in the state of Utah. I have been since 2003. That makes me officially old, but I've been around long enough to see the Federal Reserve do this and many other things over the years. And so I'm going to take a minute and kind of explain what it is and why we care. First off, our interest rates, mortgage interest rates, going to be going down on Wednesday when they announce they're going to lower their interest rate. Most likely no. Why? Well, because we've already anticipated their move. The Federal Reserve is a separate entity from the federal government. They're the ones that control the monetary system. They're the ones that are printing and or destroying money, creating money for circulation. They're the ones that basically control a lot of what the banks are doing. And so when they say that they're going to do something, they tend to announce it a lot in advance to be very transparent so they don't rock the markets too much. So if you go back to August 21st, August 22nd, and you will see interest rates, meaning the 10-year treasury, have already come down about 0.25% since they made that announcement. So when they make their announcement on Wednesday, we've already adjusted for it. So we don't expect our interest rates to get any lower. Now, if they continue to lower rates, that definitely can bring down the treasury. But you got to recognize they don't want to go too far because inflation's already at 3%, which is above their target. And if you remember just a couple years ago, when inflation was at 10%, we were all pretty unhappy about that. And nothing's deflated. So we're still paying the price for that. And so that's their job, is basically kind of control inflation, keep it mellow. They kind of also have a dual mandate to help with the jobs market. The jobs market's showing really, really weak. And so that's part of why they're basically dropping their interest rates right now. So do we expect interest rates to get better with what they're doing? No. Do we expect that in the future we'll have even lower interest rates? Well, that's where it's important to recognize where we're at in the whole scheme of things. They do have a little bit of room that they can let go because they're still fairly restrictive, but there comes a point where they've gone too far when they start to become stimulative. Right now we don't want them to be stimulative because that's going to create inflation. So their interest rates, they've only got a little bit more room that they can do anything with. Will it impact mortgage rates? It's possible, but inflation is the enemy of bonds, and bonds are what creates our interest rates. And so if inflation starts to get out of hand, you'll see our interest rates go up quite a bit. So I think you're going to find mortgage interest rates are pretty close to the bottom. This is the bottom of the range already. I've been telling people for months that 7.5 to 5.5 is kind of the range that we can expect mortgage interest rates will be in for the next little while, and that's where we're at. We're in the 5.5 range now. So conventional rates can easily reach into the 5s. FHA rates, VA rates reach into the 4s. So by reach, I mean pay closing costs and get that. So takeaways for you: interest rates are not about to change, not much anyway. We're already there. Friends, family, other members that have the ability to either refinance and lock in some savings, or buy a home and actually lock in a good low interest rate on it. Those are the people that need to be taking action right now. So if you have anyone you know who is not taking action and should be, or that you would like them to work with me as opposed to others, I would highly encourage you to share this video with them and or my contact information and introduce everybody.